Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the global markets. Okay, and talk about mainly gold for right now. Right now the dollar index is pushing above that trend line, and the main reason why this is important because typically when the dollar goes up, commodities usually pull back. Now in the US trading session, I'm pretty sure there's going to be a lot of buyers in gold, but for right now we should anticipate a pullback in the gold market. Main reason being is because the dollar index is going up so drastically. You're seeing you're seeing a lot of European banks sell out their Italian bond positions. The Italian bond yields just went up by a substantial amount overnight. I believe it was 20 basis points, so it's looking pretty bad for the European Union. And basically, if you see a huge Italian bond sell-off, what typically happens is that a lot of European banks will turn around and they'll convert their currencies into various different currencies. The main ones being the European Japanese yen pair and the European US dollar pair, or the Euro US dollar and the European Japanese yen. So let's go ahead and analyze those two things real quick. Okay, European Japanese yen continues to sell off. Main reason being European banks are taking their money, they're turning around and converting it into the Japanese yen. And when you see that when a lot of euros get pumped into the Japanese yen, the European euro tends to go down in value a lot, and they go off and buy those treasury bonds with the Japanese yen. As you guys can see, over a period of time, the European currency, or the euro, has depreciated quite rapidly to the Japanese yen. Main reason why these banks are forced to do this is because, again, there are very few bond markets that have enough money inside of them to sustain the demand that these banks have. And the main point here is that if the only two hideouts for money that are big enough are basically the U.S. Treasury market at 15 trillion, or the Japanese Treasury market, which sits at around 15 trillion U.S. dollars. So between the two, both are just as good. So again, what's going on is a huge rally in the dollar and a huge rally in the Japanese yen right now. So again, lots of good stuff going on. Let's go ahead and go back to the SAG USD, and let's go ahead and analyze the gold market. Right now, in times of fear and uncertainty, typically silver and gold is a great place to be. Now silver, not as much, and the main reason why I don't really want to put my bet on silver is because it's very volatile and parabolic in nature. As you guys can go ahead and see, this thing has went all the way back up to around $42 in the past and collapsed all the way down to 26. It's done this before as well at 49 or $50 per ounce, and then when it went off and sold straight off down to the $32 area, all the way, it has basically gone all the way down to that 200-day moving average. So my experience with silver has been very volatile, not worthwhile in investing into. Now this might come across as very offensive to these silver bulls out there, but if I wanted to protect my money, it would have to be the gold market. Gold is pulling back initially at the very outset of all this happening because what these trading algorithms do is that they typically just sell their gold positions, sell their silver positions immediately after you see dollar appreciation, euro appreciation. The main reason why these European banks, the main reason why I don't think silver and gold should be selling off based on these algorithms is because, first of all, these banking institutions, their first incentive is to try and hedge their losses, protect their money, to make sure that they can return all the euros that these depositors have basically put inside of these banks and be in a position where they can return them. So what they're doing is they're taking all these euros and a bid of no faith. They're buying gold, they're buying Japanese yen, they're buying the US dollar, they're buying the Swiss franc, they're buying the British pound. They're doing everything in their power to protect their clients' interests along with their own. And one of the main ways they can do that is by buying gold. So gold will initially pull back based on trading algorithms, and these trading algorithms are set up to sell gold the moment the dollar appreciates. Dollar appreciation means deflation, and deflation therefore should cause commodities to pull back. The only problem with these commodities is that they're considered a bit of hope or a bit of security, bit of they get a bid based on uncertainty as well. So not only do they get a bid based on they sell because of uncertainty, they also get bought back up because of uncertainty. So this is how the markets work initially. The knee-jerk reaction for these trading algorithms is to sell gold with dollar strength. Once you get a good flush out, what happens is that these bigger banking institutions trying to protect their money, particularly these Italian, Spanish, Irish banks, what they're going to most likely do is they're going to buy gold, and they're going to buy the Japanese yen, and they're buying the euro, or they're buying the US dollar. So again, we already confirmed this fact by watching the euro-Japanese yen pair sell off, and we also confirmed this fact by the dollar index going up rapidly. So again, the main point here is that I don't want you guys to panic. I think gold and silver will have a minor pullback, but will continue to go higher based on international demand for gold reaching new all-time highs. As they sell out of their European bond positions, they have to reallocate that capital into different means of assets. Now, when will eventually gold and silver collapse? When will this really super huge trend in gold eventually pull back? Well, if you guys understand the money multiplier effect, and I should probably create a video on it, what happens to gold is that it gets a bid in times of uncertainty and when they want to protect money. Now, what happens when the Irish or the whole pigs defaults on their loans? Well, approximately $7 to $10 trillion worth in cash can no longer be returned. So $7 to $10 trillion will disappear instantaneously. It'll become worthless. And when $7 to $10 trillion disappears, the value of currency will go up because the rarity increases. It's sort of like, why would you buy a really expensive handbag, or why is Louis Vuitton so expensive? Well, Louis Vuitton is very expensive because there's a very small supply of it and there's a lot of demand for it, and they're also priced really expensively. Now, in the case that you don't have a lot of supply of currency, what happens is that you sell off a lot of commodities, stocks, and etc. And that's where deflation sets in. It's when $7 trillion worth in assets just disappears instantaneously in the form of default. When these institutions default on these loans, you're going to see a humongous sell-off in gold. There won't be a bit of faith in gold. What's going to happen is that these currencies, the remaining currencies like the US dollar, the British pound, the Japanese yen, those will be hoarded. Those will be hoarded and they will be protected. And what's going to happen to gold is that all this gold is going to reduce in value, not because there's something inherently wrong with gold. It's just the total amount of global currency will shrink by 15 to 20% the moment the Eurozone breaks apart. And when you get a shrinkage in currency, what happens is that the remaining currency becomes more valuable. And when currency becomes more valuable in a pair to gold, currency compared to gold, I'm not comparing gold compared to other assets, I'm just comparing gold to currency. When you compare the two and you have a sudden shortage of currency, but you still have the same amount of gold, what happens is that that same currency should be able to buy more of that pre-existing gold. And when that happens, when you get to that juncture, when these governments get bankrupt, gold will sell off that very day, regardless of however much gold goes up in anticipation of that whole entire debacle where European banks are selling out of their euro and they're buying gold. You're going to get a build-up in gold price due to that. But once these European governments go bankrupt, you will see a shrinkage of total nominal currency across the world. And when that happens, you're going to see a shrinkage in the value of gold in proportion to all currency, including the US dollar or the Japanese yen. So again, I hope that covers it for you guys. Right now, I am a bull on gold. I think gold will have a temporary pullback. The 20-day moving average can be seen as a great support area to buy off of in anticipation of gold eventually going back to $1,900 per ounce. Okay, now let's go ahead and analyze a couple gold mining companies. Freeport-McMoRan, I'm not too convinced. I think that it could break below this bottom channel area. I don't really like trading gold mining companies, silver mining companies, because they don't move in the same direction the gold and silver commodities do. And basically, Freeport-McMoRan is impacted by both silver, gold, and copper. So again, that recent sell-off in silver and the recent rally in silver is what's causing Freeport-McMoRan to go back up. Right now, I do think that Freeport-McMoRan will most likely pull back all the way down to that 50-day moving average, which is that blue line right there. Once it does, you could probably see a pretty decent bid in this market, and with silver and gold being bought to record highs, or gold and silver will be bought back to record highs based upon how these international banks are going to act. And because of that, you could see Freeport-McMoRan getting a small bid, but in reality, I'd much prefer it if you guys would just buy gold and avoid trying to trade these mining companies if you're a longer-term investor. New gold, same story here, except I would wait for this 200-day moving average, appear straight through that 200-day moving average, and for it to touch this trend line right here. This would be a great buy-in at around $10.50. Thanks a bunch, guys. I appreciate the time you guys put in just to watch my videos. Take care, folks. I hope you guys have great trading results, and you guys have a wonderful day. See you guys later, and I'll have more for you guys in the weeks and months ahead.